Good evening, VV Nation. This is Ron Wheeler, manager of options trading here, and it's my pleasure to bring you tonight's special presentation, how to turn the best stocks into options income. Oftentimes, traders are hesitant to trade options, and it's because options can be scary. But options at the end of the day are simply a different way to trade a good stock. In fact, all the best option trades start with finding the best stock trades. So let's talk about how to find the best stock trades. So let's take a look at an essay that really inspired me here. So I want to go into VectorVest. Let's click on Views and go to the essays. And I want to recall an essay that was written back on March 28th. And this was a real eye-opener for me. It was an eye-opener for me because, I've been trading now for 27 years. But before I came to VectorVest back in 2015, I really shunned the idea of fundamental information. I didn't think that was very important. I was a technical analyst through and through. It's all I used. But VectorVest really opened my eyes to understanding how the fundamentals, earnings, growth can really affect my stocks. So one of the reasons that this really hit home for me is, let's go ahead and just open the essay and read a little bit of it. And I want to scroll down to right down here where it talks about in Dr. DeLito's book, Stock Strategies and Common Sense. And I want to go down here to the earnings growth rate of your stocks must be consistent with your investment objectives. So one of the things that was talked about here is how growth affects your stocks. Now, I looked at this and I was kind of curious. I'm not much of a stock trader. I love trading options. That's about 99% of what I do. However, I do own a few stocks in my retirement portfolio. So I want to go over to viewers real quick here, and I want to share with you 3 stocks that I own. Now, mind you, I keep a lot of these stocks through market downturns because I'm an options trader. So I'll do protective puts, I'll do covered calls. I protect myself very well on these long-term holdings. But I want you to take a look at these 3 stocks I own: Amazon, Microsoft, and Apple. And I want you to go right here to the growth rate of those stocks. 36% on Amazon, 17% on Microsoft. But take a look at Apple at 8%. Now, I want to look at the graphs of these things because it's really interesting to see how the graphs of these stocks are performing. Take a look at Amazon. Amazon is in a clear uptrend. It's a beautiful stock. Now, we can say that over the last week or two that the stock has gone down, and I would agree with you, but we also had a change in market timing as well. The dew has turned down. A lot of our indicators have turned down because the market seems to be at a top. But Amazon has been very, very good over the last year. Now, let's take a look at Microsoft. You can say that Microsoft is basically the same thing. It's been in a nice uptrend. It's had a couple bigger pullbacks, but over the course of the last year, it's gone from $280-ish a share to over $400. Fantastic stock. Good growth rate is the key. Now, I want you to I'll scroll down, pardon me, to Apple. Apple had that low growth rate, and I want you to take a look at Apple. Apple is trading essentially today for exactly what it was trading for a year ago. Yes, it went up, and then it came down. It went up, and then it came down. This is not the type of stock, and I hesitate to say this because I own it, but remember, I also do lots of, protective maneuvers with puts and calls and things like that to protect this. I like it as a long-term holding for the dividends. So, take a look here. Growth is so important to selecting good stocks. Well, in that essay, Angela talked about a scan that we can use for this. If I go over to the Unisearch and I go to Searches Retirement, there's two scans that I really love for finding good options trades. Number 1 is Premier Growth. This strategy finds safe, predictable, high market capitalization stocks that are moving up in price. And if you take a look, every stock in this scan has a growth rate over 14%. That's crucial. So if I just do this scan as of today, I'll just run it. Now, again, the market has been moving down the last couple of weeks. So understand that some of these are probably going to be coming down in price right now as the market moves as well. But if I go ahead and just scan and I look at some of these stocks in a graph, you're going to find some stocks that have performed very well. MCOR, General Electric. They did have that spinoff, so that graph is not exactly perfect. NRG, Vertiv Holdings, NVIDIA, CEG Constellation, Progressive. Even though the market's coming down, look at Progressive. It's made a 52-week high today. These are stocks that are dependable. These can be an important way to find a good stock to trade options on. Remember, the key of starting a good options income trade is finding the best stocks. Now, that's a bullish market. We found some really good stocks in a bullish market. But let's take a look at market timing real quick. Let's go to timing, and let's go to our market timing graph. Here's our market timing. As we can see right now, we are in a confirmed call down. Now, my favorite market timing gauge is the DEW. And we are also in a DE down going back to April 10th. So how do we use that growth to give us examples of stocks when the market is down? So when I do my stock trades, I like to look for good stocks. Now, good stocks is kind of a universal term I use. A good stock in an uptrend means it's moving higher. A good stock in a downtrend means it's moving lower. So when I think of a confirmed down or a due down, and I say, let's find some good stocks to trade, good just means it's moving in the market direction. So now that the due is down, let's go back to our Unisearch. One of the scans that'll pick up some really good opportunities for you based on that growth, if I go to searches and I go to short, so under that searches short folder, if we scroll down, one of the scans I really like is show me the money short. And the best part about this scan, read the comments. This search finds non-dividend paying stocks over $10, rated either a sell or a hold. That's good if we want them to go down, with negative growth. The sort favors the most overvalued stocks with the lowest RT and negative earnings yield. This is a shorting search. So the biggest thing that I like about this scan, amongst a lot of things, is if you look at the parameters, stock growth is less than 0. These are very poor growth stocks. Let's go ahead and run the scan and see what kind of stocks come up in this scan. So the first thing I see is I see the price. The price, pretty low. Now, when I'm trading options, one of the things I want to do, especially for an options income trade, which we'll talk about here in a few minutes, how to set that up, is I want stocks to be a little bit more expensive because I want the premiums to be higher. I'm going to be selling premium. So the first thing I'm going to do is I'm going to filter all these low price stocks out of this scan. I'm going to go up to stock price actual, and I'm going to change that to $50 a share. Go ahead and hit enter, and let's run the search again. Now we're getting a lot more expensive stocks. Moderna, $102. Vaxcyte, $60. I see MicroStrategy down there, $1,210. These are better stocks for income trades because the premiums will be higher. Now, the next thing that I want to do for an income trade, I want these stocks to be stable. And it's been my experience that stocks that are pharmaceutical and drug stocks may not be the best for this. They tend to gap. They have announcements that could come out of the blue about a drug trial. They're just not favorable for me to do to do income trades on. So let's do this. Where it says stock industry group does not include ETF shorts, I'm not worried too much about that. What I'm going to do is I'm going to change that and go to selected industries, and I'm just going to go down to where it says drug. And I'm going to take all of those out of the picture. I'll take all of those out. Okay? Now, the ETF short will stay in there. I'm not going to remove that, but I'm going to add don't look at pharmaceutical stocks. Click OK, and let's go ahead and run that search again. Now, we still get a list of good stocks. Carvana, MicroStrategy, Silicon Labs, Casella Waste, Floor & Decor. These are all good stocks to look at that are shorting opportunities. So let's just look at the graphs first of all. I'm going to take a look at the graph all button, and these stocks are overvalued with negative growth. Carvana. It had a nice year for the most part, but now it's got negative growth and the stock is moving down. We got MicroStrategy. Hit a huge high, now it's selling off. Kava, overvalued stock, negative earnings growth, moving down. Silicon Labs, same idea. Casella Waste, same idea. Floor and Decor, same idea. Azenta, same idea. So you get the idea of what's happening here is you're finding stocks that are moving down along with the market, but they also have fundamentals that suggest this should continue. And that's the beauty about that scan. So this list of stocks is a good starting point. And you can take this list right now and look for some great option income trades. And again, we're going to talk about that a little bit later. But what I like to do is I like to go a little bit deeper. And this gets into my technical analysis background because I like to look at the graph. I want to make sure these stocks are moving lower and lower and lower. So what do I mean by that? First and foremost, what I like to do is I want to make sure these stocks are moving lower today. So I'm going to do a scan. Stocks, price, the price actual is less than value. We're going to go to custom date and value, and we're going to go under date, 1 day ago, and under value, stocks, price, and I'm going to choose the day's low. So if I click on that, what you're now going to see, take a look at some of these price changes. See how some of the stocks are actually up today? If I run the search now, the only stocks that will come up are going to be down for the day. And by the way, that's important to me. When I'm looking to go short or do a bearish options trade, I only want to trade stocks that are moving down. So if the stock is up for that day, I won't trade it. I'll wait for it to be down. I want it to be moving in my direction on the day I place the trade. Now, if we want to be a little bit more aggressive, we can also stocks, price actual is less than, and we'll go back to custom date and value. We'll choose a date that's 4 weeks ago, so essentially a month, and under value, stocks, price, and we'll go to price actual. So what that means is that the current price of the stock is less than it was 4 weeks ago. Go ahead and run that search. And it comes up with essentially the same list of stocks, but take a look at them in the graph. I'm going to open up a graph, and now you're seeing stocks, and I'll go to a 1 month graph. It's lower than it was a month ago, and you can also see it's lower than it was the prior day. Silicon Labs, Site, MTSI, SITM, Ametasys, Keysight Technology, Corvo. These are all moving lower day over day, and that's very, very important. And they're moving lower month over month. Now, I think this is good as the market right now is coming off of a 52-week high. We're a couple weeks past that, of course, but we're moving much, much lower. So these stocks right here have some good potential for some options income trades. Now, the last two characteristics I'm looking for, this is something that I'm going to manually look at using the graph. So let's go back to the graphs of these stocks that came up in the list. Go ahead and graph all. And there's two more parameters I want to use here. Number one, I want to look at earnings, because I'm not looking at this point of earnings yield or anything like that. I want to look at the actual earnings date. I do not want to take a trade that has an upcoming earnings event. I don't like to hold my trades over earnings, especially these options trades, which we're going to talk about here in a couple minutes. I do not like to have upcoming earnings. I usually like to be at least 3 weeks away. So if you look at Silicon Labs, the last earnings event that you see was back on February 7th. If I go back on the graph, it looks like my next upcoming earnings is probably going to be around the end of April, April 26th. So I would say that Silicon Labs is probably too close. I want these earnings dates to probably be at least in May. If I scroll down, Site, the last earnings event was back in February, and this one looks like it's in the beginning of May, May 3rd. So that's going to give me roughly 2 weeks. Let's see if I can find something else. We have MTSI, same idea. Earnings are going to be probably in early May. We have SITM, earnings. I'm just going back to, 4 earnings announcements ago. 1, 2, 3, 4, and that's back in May. Now, keep in mind, we are in earnings season, so that definitely does play a role here. And then AMED, I don't really see any prior earnings except for back here, right around May as well. Keys had earnings in February, and it looks like the next earnings date is going to be somewhere around May 16th. That's far enough out. I don't have a problem with that. So earnings, we want to make sure they're at least 3 weeks away. And you can verify this through your broker or like Yahoo or something to get the exact earnings date if you'd like. Now, the next thing I want to take a look at is a stock support levels. And I don't like to change anything about this. So I'm going to go to Add Parameter. We're going to go to Technical Analysis, and we're going to go to Support and Resistance. And again, I'm not going to make any changes. I'm just going to use the default settings of the VectorVest support and resistance. So if I look at keys right now, the support level on keys is 148.18. You can see that it closed below it yesterday, and I'll zoom in a little bit here. It closed below that support yesterday, and today it's continuing to sell off. So keys may be an opportunity that we can look at. Let's keep going. This is Corvo. Corvo has some support coming, but it's not till about $104 a share. So it's got another $3 it can move. Not bad. It just broke a support prior. Again, closed below, moving lower. The last earnings event, also right around early May, so that one might be a little bit of an issue. We got Solar Edge. Solar Edge is right in the beginning of May, but really no support level in sight on Solar Edge. So what I would typically do in this case is I would try to go out there and find out when the actual earnings date are on some of these stocks that I like. And again, you can use a third-party source for this just to get the exact date. It should be around the first part of May. But if I take a look at Solar Edge, and I'll just go to using my broker for this, they're saying that earnings are May 8th. Well, May 8th is about about 2.5 weeks away on Solar Edge. If you remember keys, the earnings event on keys is really at the end of May, May 21st. So out of these trades, I'd say Solar Edge has some potential. It does have earnings, 2.5 weeks away, so I might be a little bit more skeptical on that one. Corvo, it does have a little bit of support, and then the earnings event is on, let's see, the confirmed date is May 1st, probably too close, and then Keys. Keys looks pretty darn good. Keys doesn't have earnings till late May. It just broke a support level. It doesn't have another support until 138.14. I think that looks pretty darn good as a possible options trade. So before I get into the options part of this, let's talk about a summary of what we've talked about so far. Look at earnings growth. If the growth is over 14%, you got a good stock. Premier growth stocks, we'll definitely find these for you. Ruler stocks, another great scan. In a downtrend, show me the money short. Less than 0% at the earnings growth, it's going to find you some great stocks as well. And any scan that does growth like this is going to find good potential opportunities. I want to have the minimum stock price, $50 per share. The current price lower than it was than the prior day and 4 weeks ago. Upcoming earnings, at least 3 weeks away, and no upcoming support level. So that's what we're looking for in a good stock. And like I said, Keys looks like a pretty good potential opportunity for us here. Now, let's talk more about the option trade. What we're going to do is we're going to do something called an option income trade. And an option income trade is very simple. It's a trade where we can make money even if we are wrong on direction. So we found the stock. We found a really good candidate for an option income trade. So let's take a look at the option side of this. We're going to do a trade called a bear call spread. A bear call spread is when we sell a call and then we buy a call in the same transaction as an insurance leg. So this is not a naked option sell. So in this bear call spread, it's got a couple advantages. Number one, it has a maximum risk. If I take a look at this trade right now, if I sell a 145 call and I buy a 150, this trade has a maximum profit of 245 and a maximum risk of 255. That sounds pretty good. Now, the problem with this trade in particular is this trade does not really have a lot of probability to be right. And here's what I mean by this. I want you to take a look, and I want you to look right at the current price. I'm going to draw a little arrow there, and I'll make that a little bit bigger so it's easier to see. And let's change the color of that guy. We'll make it purple. This is the current price of the stock. Now, this particular trade, by the way, does have a little bit of probability. This blue solid line, this is your profit on the trade when the trade expires. We generally sell an option 21 to 45 days away. This happens to be a 28-day expiration, the May 17th. Now, what this risk graph is telling me is on May 17th, as long as the stock is at the current price, which is $110 a share or lower, and if you look at the bottom of the risk graph, this tells you the stock price. So if the stock was at $140, you would make the maximum of $240 on this trade. If the stock was below $150 down here, you would suffer, I guess I could put that arrow pointing down, you would suffer the maximum loss of $260. Now, that trade in and of itself does have a little bit of probability because the trade can go sideways and you can still make money. Now, I'm going to add another line to this real quick. I'm going to pretend that we are just going to buy the stock. Or, I'm sorry, let's do this. We're going to go short stock. There we go. All right. So that orange line is shorting the stock. So as you can see, if the stock goes down, you are going to make money. If the stock stays exactly where it is, you would break even. Whereas if we do the bear call trade, we would actually be at partial profits. We would make about $109 on this position. Now, what we want to do is we want to set this trade up using some probability. Now, what probability is simply this. It's a study of past price performance on the graph, and it gives you an idea of where this price could be in the future. Now, the great thing about options is all options have a built-in probability, and most of your brokers can show this, but Options Pro is a really easy way of showing this. Number one, we can see it right here on the risk graph. The May 17th 145 call has a 53% chance of being in the money. Now, what we do not want as an option seller, I do not want this option to be in the money. That means the stock price actually finishes above the price of 145. And there's a 53% chance that this stock will be above 145 at expiration. That to me is poor. That's not income. That's not probability. What I want to see is a trade that gives me a 60% chance. A 60% chance of winning. This trade, based on a 53% ITM percentage, only gives me a 47% chance of winning. I want this option to be out of the money and stay out of the money. So, what we would look for is we would look for an option where that ITM percentage is actually less than 40%. Here's what this does. I'm going to change this, and you can actually see right now that 150 call has a 35% chance of only being in the money. So let's change this trade around a little bit. I'm going to sell a $150 call, and I'm going to buy as insurance my 155. Now, I'm going to remove, actually, before I even remove it, let's talk about it. This is the stock price. If I just sold short the stock, I make money if the stock goes down. But now I want you to take a look. With this option trade, if the stock goes nowhere within the next 28 days, you make money. In fact, you're going to make money on this position as long as the stock stays below $150 a share over the next 28 days. That's the beauty. This option only has a 35% chance of finishing in the money. We don't want it to finish in the money. That's bad. That means we lose. If we only have a 35% chance of losing, that means we have a 65% chance of winning. That is what we call an income trade. We can go down, we can go sideways, or this stock can even go up, and we can still win on this trade. It's a great stock. It's got poor growth. It's got a poor graph. It's not near any support. This is the kind of trade that we would want to take as an options income trade. Now, I realize from the options side, we're leaving a little bit on the table. I can't teach you the entire concept of options trading in only a few minutes. I'm trying to give you some of the quick highlights. Now, another quick highlight is this. First off, I'm going to take away that position that we had on the stock. So another great aspect of this trade is that these trades have a built-in stop price. So I'm selling a $150 call. That means if the stock goes up to $150 a share, that's my exit. I'm going to exit the trade right there. Now, if you take a look at the right-hand side, this trade has a credit or a maximum profit of $165. It has a risk of $335. Now, you may look at that and say, Ron, that's really, really poor. In fact, it's not, because that's not going to be your real risk, and that's not going to be your real profit target. When we do these types of credit spreads, we are going to do two things. Number one, we are going to take our profits at 50% of the max profit. Max profit is $165. We would take profits at $82.50. Now, the beautiful thing about this is this. I'm going to add that other line to the risk graph. That dashed line that just came in there, that is the profit and loss as the trade progresses. So I showed you the solid line. That's the profit and loss if you let the trade expire. We're not going to let the trade expire, by the way. We're going to get in and out of this trade like any other trade that we would do. If I went and short this stock and I said, hey, my stop is 150. If the stock rallies to 150, I exit the trade. I do the same thing on the option spread. So I want you to follow this dashed line. If the stock rallies past 150, I'm going to turn my crosshairs on. I'm going to exit this stock at around 145. And my loss, if you look in the upper left-hand corner, is going to be $45. This trade has a $45 true risk. But Ron, what if it gaps and goes up to 152? Okay, then your trade only has a risk of about $75. This is one of the reasons why we filter out earnings. Earnings are typically the big gaps, so we want to filter that out of the equation. We're going to be out of this trade before an earnings event. Now, the second thing is, we're going to get out of this trade at $82 in profit. So I want you to follow that dashed line higher until it says about $82. And that's about right here. So the stock has to go from 146 to 138 to get that $82 in profit. At that point, we're going to take the profits off the table, and then we are going to either enter a new trade if we think that Keys is going to continue to go down, or we can take our profits and move to another stock. So in reality here, this stock has an $82 profit, and it has a risk of only about $45. And you have a 65% statistical chance of making money. And that is an income trade. This is how you can trade with probability. You're stacking it. We've picked a great stock that VectorVest has picked for us. Now we put a great options trade behind it. This is the primary way that I make my income every year. The great selection of VectorVest and good stock selection and good option selection. This is the key to being good at income trading. So a quick summary of the option portion. We want that ITM percentage to be less than 40%. That gives us at least a 60% chance of winning. 21 to 45 day expiration on our spreads, and a good risk to reward. Now, again, that's only a summary, a very good starting point for how we do these options and income trades. And again, it all revolves around the best stocks. Now, if you'd like to see the full package, the Options Paycheck Experience is the most comprehensive program for generating income using options, even if you've never done this before. This is the only implementation program of its kind that not only teaches you how to find the right stocks, but then properly set up, manage, and do everything you need for that option strategy. After going through the experience, you're going to know exactly how calls and puts work, so you don't have that fear of options anymore. You're going to know what you need to pay attention to, what to ignore. That way you're confident. You're going to have clear signals telling you when to trade, when not to trade, when to go bullish, when to go bearish. You're going to be able to identify the stocks that are the best candidates. You're going to be able to set up an option income trade that give you a base level of 70% success. That's when you combine good stock selection and that good option ITM percentage. You're going to have a trade management game plan in place prior to placing your trades. You'll be able to confidently enter and exit trades with your broker. We'll show you how to do it. You're going to be able to implement a system that safely and consistently generates income. The course is an 8-module course. It's taught live and via recordings primarily through the month of May. We actually start on April 30th. And with that 8-module where we teach you everything from option income foundation all the way to entering orders with your broker, we include a couple of bonuses as well. We expect you to watch the actual modules via recording, and then we're going to get together 3 times a week through mastery sessions and weekly Q&As to help you make sure that you're understanding all the material. You're going to get access to a private dedicated email that goes right to me and my Options Paycheck team. And if you don't already have it, we're going to give you 2 months access to both VectorVest and the Options Pro software starting in May. That way you can experience those tools that we use to really help us find the best trades. And I think one of the greatest bonuses of this is the implementation month. In late April or late May and June, we're going to invite you to my live weekly coaching. This is where I actually go out, find the trades in VectorVest and Options Pro, and actually place these trades. And you're welcome to join with me, place the trades along with me as well. We want to make sure that you have plenty of time to implement this while we're still working hand in hand with you. We also hold office hour sessions twice a week. That way we can continue to go through the process of trade selection and answering your questions. I'll even show you how to place trades at night for the next trading day. We also include our SPX paycheck system. This is where we take the entire concept down to 1 trade on the SPX a week. It can be done in as little as 15 minutes a week. And it's also something we show in our live trading sessions. So for the Options Paycheck Experience, you're going to get the 8 modules that has videos, checklists, cheat sheets, quizzes, the mastery package, access to VectorVest and Options Pro for 2 months starting on May 1st, private dedicated email support, live mastery sessions, access to our weekly credit spread classes starting in late May, the SPX paycheck bonus. The total value of that is $54.75. But with the special presentation, we actually do have a bonus for you. If you order before Monday at 6 p.m., our normal $12.95 price is down to $9.95. All you got to do to take advantage of this, go to www.optionspaycheck.com. And before I go, the one last thing I want to talk about is we offer a 100% money back guarantee. If you're not satisfied we told you how to find the right stocks, use the best option trades for income, you can get your money back. All you have to do is take the course with us. You have to try. You have to do the classes, do the assignments. If you do and you're not satisfied, you get your money back. It's as simple as that. So again, optionspaycheck.com, get yourself registered for the class. It starts April 30th, $9.95 if you order before Monday at 6 p.m. Thanks for joining me, VB Nation. Best of success to you in the future, and I look forward to seeing you in our next Options Paycheck Experience. Good night, everybody.
Yeah.